Hello, I'm here with Jose, and today our topic is accounting for e-commerce businesses area. So it'll be very valuable to your his thoughts on this. So, Jose, can you tell us what is e-commerce accounting?
Yeah. So e-commerce accounting refers to doing accounting. I mean, not much of an explanation, but basically doing the correct accounting for your online retail business. So yeah. So basically, if you're a business or if you wanted to sell in Amazon, Shopify, Etsy, Walmart, or different platforms, yeah, basically it's about accounting those transactions for those types of business.
Okay, and now tell me, how does that differ from accounting of a traditional business?
Yeah, great question, Ed. So it differs in a way wherein it has its own complexity, wherein online sellers have to deal with sales taxes, have to deal with platform charges. Like, say, for example, on Amazon, you just don't sell products in there, but they also charge some fees like storage fees, um, transaction fees, commissions, etc. So there are those components wherein it is present in e-commerce business, especially if you're selling on a platform versus maintaining like a traditional store or traditional online retail business.
Okay. And now, you mentioned sales taxes, and typically in online, a brick and mortar store has sales tax in the jurisdiction where they're located. How does that apply to an e-commerce business that is doing sales over multiple jurisdictions?
So that is a bit complex because if it's like a traditional brick and mortar business, of course you have to file your sales taxes in the state where you're located, right? Wherein if you have an e-commerce business and if you do have, or if you have businesses, or if you're selling to multiple states, you also have to collect and remit taxes across those different states.
I see.
So yes, so that's why it's a little bit complex as far as when we're talking about sales taxes for that matter.
Yeah. So I can see that in its complexity, there's probably some common accounting mistakes that occur. Can you give us some ideas of what those might be?
Uh, for me, the common mistake is that most of the owners are recording their settlements. Like, say, for example, they made a sale in Amazon or Shopify or different platform, right? So whenever they receive money from those platforms as their product, I mean, as their settlement comes in, they are recording it directly as sales, which is an incorrect way of recording that one because once you receive those settlements, it has many components. Many components, what I meant by that are like, your actual sales, those commissions, refunds, that were deducted from those sales are already part of those, which needs to be accounted for correctly.
Mhm.
That's the number one mistake that has been happening. And of course, some other methods like incorrectly calculating cost of goods sold, um, not monitoring cash flows properly, and of course using the wrong accounting tool and keeping a disorganized books.
Right. Yeah. Yeah. And I guess some e-commerce vendors have an inventory to manage as well. Some do, some don't. Would that be correct?
Yes, that is correct.
All right. Yeah, I can see it's a complex process that needs to be set up properly from the beginning because obviously if you don't set it up properly, then your everything downstream is a mess. And then once it's set up properly, it's maintaining it properly, like any accounting, but much more so. So I can see how it's much more critical for an e-commerce business. Um, what about inventory? What is the proper inventory management and why it's so crucial for an e-commerce business?
Really great question for that one. Um, as we know, when we maintain a usual or what do you call it? A traditional retail business, mostly we just do physical counting and of course comparing actuals versus what should have been in accounting. But in e-commerce, it's a bit different. It's because you cannot see your product physically, especially if you're doing a fulfillment by Amazon, wherein your products are in the Amazon warehouse and you're selling it online, right? So that's why it's really critical here for us to use a certain software to track your inventory so that we can avoid these issues.
Mhm. I see. So getting the proper technology stack to manage all of these, I can see is pretty critical.
Exactly.
Yeah, and you have experience with all of that top to
Cor-
bottom stack. So,
Correct. Correct. Yes. And
uh,
added to that, Ed, what's crazy about it is that, of course, having those inventory placed not on your place or not on your personal warehouse,
right.
but probably an Amazon warehouse, there's a lot of cases wherein inventory can get lost. It,
Mhm.
for some reason it went missing, for some reason it was lost in the ocean, so something to that effect, which added to the complexity of this
Right.
certain business model. Yeah.
Yeah. Yeah. Okay, I can see that. As I was talking, I'm learning more and more about how complex this is. Um, so now let's go back to the topic of sales tax. How would an e-commerce business, or how should an e-commerce business handle sales tax?
Yes. So first of all, they have to know and they have to track carefully where their products are being sold. So say for example, it was shipped to, let's say, New York, it was shipped to Arizona or different state, right? So
Right.
first there has to be like a careful understanding as to where the products were sold, so that we could be able to calculate carefully where should we be filing the sales tax. Um, then once we have those tracked carefully. From there, we could be able to, file those sales tax on those different jurisdictions.
Hmm. And that's something that can be, those tax rates can be kept in the accounting software.
So yes,
Okay. So that leads me to my next question is about the importance of choosing the right accounting software for an e-commerce business. Obviously, just the off-the-shelf kind of standard accounting program would not be at all useful in an e-commerce business. Tell me about choosing the right software for this.
yeah. And I'd like to put a disclaimer first, that we're not promoting exactly a specific accounting software, but
Oh, yeah.
this is just based, yeah, on the best practice that I've used based on the experience that I had in handling multiple e-commerce businesses
Mhm.
from the past. So um, we could still use an actual, the usual accounting software like QuickBooks and Zero, but we're actually using a special software to integrate with those softwares, and that software is called A2X, wherein it has an automation to pull in those entries. So pull in the records from the products that were sold, commissions that were deducted, storage fees, and all those fees associated to making a sale in this type of business be integrated directly with those accounting softwares that we have. So basically, A2X integrates and automates and consolidates those crazy entries that or crazy transactions that Amazon, let's say, has on their platform and put it in the accounting software that we have.
Okay.
So it streamlines the overall process.
All righty. So a stack of accounting or tools to accomplish this is what you really need. Um,
Correct.
very good. Okay. Um, now, what about cash flow? How does that differ from your typical business?
Really, really great question. So I'd like to set an example first for a service-based business, right, Ed? So
Mhm.
say, for
Okay.
example, let's say I'm an accountant. So I'm going to bill somebody for my service, and of course, I'm going to expect a repayment for my service, something like that, which is very simple. right? So what's tricky about an e-commerce business is that there's a bit of a delay. So say for example, you make a sale for a certain period, like let's say for the previous week. You won't, as the usual retail business, when you sell a product over the counter, you'll get the payment right away. With
Right.
e-commerce, it gets to be accumulated for the whole week. Then you get to be repaid on a certain week. Normally, it's a weekly payment. But there are some cases wherein the settlement, it depends on the amount, right? If the amount is too small, you won't get that settlement for the next week, probably for the next week until you meet the minimum requirement. So as far as revenue goes, and it's not an immediate recognition of cash.
Mm-hmm.
So there is a bit of a delay on that one as far as the revenue goes. And as far as paying and as far as the expense goes or money outflow goes, there is a bit of a trick wherein, say for example, you're going to order your product from China. And of course, there will be an upfront payment that the vendor or the supplier would need, right? So of course, there's a money outflow to that. You have to be certain and you have to know, uh, probably not exactly probably, but probably some sort of like an estimated date on when your product will arrive. So say for
Mm-hmm.
example, you pay the vendor right now. Sometimes it would take like 2 months, 3 months, or worse, 6 months for your product to arrive at your warehouse and be ready for sold and be ready for sale. So you would probably need a certain level of understanding as far as maintaining a margin of safety or a certain level of inventory at your warehouse or at your disposal ready to be sold. Because I did experience one wherein the product is just completely delayed and they're out of forecast with the level of inventory that they have. So they do have some months wherein they don't have any products to sell. And
Uh-huh.
their OPEX, like their fixed costs, just keep on going. So
Mm-hmm.
there, so that's how critical it is for us to understand the cash flow for an e-commerce business.
Got it. Interesting. So now on the cash flow, you mentioned the settlement weekly. So it's a bulk settlement, correctly? So it includes um, multiple transactions in one settlement, or
Yeah.
multiple sales, I should say, in one settlement. Is that correct?
Yes, that
So
is correct.
you need to be able to split those out as well. So even more complexity to the process. Um, all right. And then how about multi-channel? I mean, you've mentioned Amazon a lot, but that's not the only platform that an e-commerce company may be using. How does that complicate the process of using multiple channels?
Okay. So first is that it's complex in a way wherein it differs. Like say for example, like what I've mentioned earlier, if you're selling on Amazon, Amazon has a different platform or a different setup, a different way on how you extract the reports. Say for example for Shopify has a different methodology as well whenever you're going to extract those reports.
Hmm.
So it's complicated in such a way that, I mean, the business is there. I mean, the selling of products, the cost of goods sold is always going to be there. But the way um, this platform are formatted, as far as report goes, makes it a little bit tricky.
Hmm.
So that's why A2X, again, not promoting A2X, but this is just based on experience, somehow streamlines it because they already know the code and the way they will pull the report so that once they pull the report on those specific sales platform or sales channel, it will just be, a simple format once it brings in the records to the accounting software that we're going
I
to use.
see. I see. Okay. All right. So these tools definitely help quite a bit in simplifying a rather complex process.
Correct.
Well, that's good. All right. And
Yeah.
yeah, did you have more to add?
No, no, I think that's good. Yep. I'm
Okay.
good with that one.
So let's go back to basic accounting itself. Now, obviously, there's two ways of doing accounting. It's the cash basis and accrual basis. And anything that has an inventory, certainly accrual is more important. So why is it important to use for an e-commerce business to use accrual accounting?
Okay. So I'm a visual guy, Ed, so I'm going to
Okay.
present something for the sake of our audience as well, so that you do have something to look at. Um, so let me know if you can see my screen.
Okay. It is popping up. There we go.
Okay,
Cash versus
good.
accrual. Okay.
Perfect. Okay, so I do have this simple diagram here. We're in not really diagram, but a certain set of data. We're in. I'm using Amazon as a test sample. So if
Okay.
we are using cash accounting, so basically we are recognizing the revenue based on what was deposited on our account, right? So say for example, if we receive, it's like the number here, it says $82,860. If we
Right.
receive this one on our bank account, based on the cash basis, we would recognize this one as income. We're
Mhm.
in reality, if we're going to take a look at what composes that 82,860, normally in an Amazon settings, it would look like this. So it has its sales component. So technically, your actual sales could have been $135,000
Mhm.
plus those other shipping income or sales tax collected, less those Amazon fees, refunds, promo rebates, etc. So it has multiple transactions wherein some of these are in the profit and loss state. I mean, some of this would appear in the profit and loss statement, and
Mhm.
some of this would appear in the balance sheet.
Right.
So it has a certain movement in the income side and on the expense side for the fees, then
Mhm.
some certain movement for the sales tax that were collected for those, which is really complex if you are selling in multiple states, plus
Right.
also those inventory movements as well. So in the eyes of the cash basis, it's really simple. But if you're going to take a look at what's actually moving, right?
Mhm.
Um, those are a bit complex.
Right. I
So
can see that.
let's yeah, so let's talk about business as well, as far as how it looks like whenever we're going to look at, let's say, the profit and loss for a certain e-commerce business.
Mhm.
If we use cash basis, okay, so of course, like what I've said, 82,000 would be your income. Then let's say you purchase an inventory worth 100,000. Okay, so if we're going to use cash basis, it would look like 82,000 is our sales. Then our cost is, let's say 100,000 because we've purchased an inventory with 100,000 amount. It would look like that we are incurring a net loss,
Right.
right? But in
Mhm.
reality, we are not. Because if we are using an accrual base, we have to follow a careful principle called matching, wherein, say for example, we are selling worth, let's say 135,000. We only need to report on our cost of goods sold the amount or the inventory that was sold.
Right.
Okay. Versus in cash, wherein all the purchases has to be recorded as, as a purchase or as a cost of goods sold
Mhm.
because we don't contain an inventory in a cash basis accounting. So, I mean, if we're going to take a look at cash, it would say we're a net loss, right?
Right.
So, as a business, we would think that, hey, we're losing money. We shouldn't be ordering products, something like that. Versus in an accrual, we would get an actual revenue,
Right. I see.
actual profit of what actually happened on the business,
Mhm.
and how much income did we earn based on the products that we sold that's on sales, and cost of goods sold based on what we only sold, and have the remaining inventory that were unsold be reported in the balance sheet.
Understood. Understood. So
Yeah,
for the stakeholders in this e-commerce entity to really know what their profitability is, or not profitability, the accrual basis is critical to that process. It's the only way they can really get an accurate picture of what's going on in their business. Is that correct?
exactly. That
Yeah.
is correct. So that is why in an e-commerce business, it's really critical for you to know your gross profit margin, right? So, the products that were sold, that's the cost of goods sold. How much are you making on that one? Because that gross profit margin will define how much fixed expense can you handle, for a certain month or for a certain year.
Right. Right. Well, very good. So in
Yeah.
summary, Obviously, accounting for an e-commerce business is more complex than most other businesses and requires a particular knowledge. It's not something for a novice to do. You really have to have the experience to do this successfully and accurately for a business. So the great thing is here at SOS Bookkeeping, we have that experience and knowledge to be able to do that for companies, and can get you set up properly with the software if you need, if you don't already have it, as well as getting everything set up and operating properly for the stakeholders in that business. Well, Jose, I appreciate your time this morning and sharing with us and explaining this to us. It's very helpful, and I hope our listeners find it very helpful as well. So thank you, and enjoy the rest of your day.
Thank you. Thanks, Ed.
Take care. Bye-bye.
Bye-bye.